Welcome back to the Digital Asset Report. Bitcoin opened Monday morning by marking up about 2% back over $64,000. Ethereum opened at $1,874 and has also edged higher, trading around $1,900. Bitcoin closed for the third time this year below the 200 WSMA, but that didn't stop a Monday bounce from sending digital assets a little bit higher. Getting into the news, Trump Media is stepping back from Bitcoin. The company built up a position of more than 12,000 Bitcoin last year, but that stake recently posted a paper loss of about $190 million as Bitcoin has slid for over 10 months. Trump Media now says it will pivot back to its core media and advertising business. And this comes as part of a broader shakeout among Bitcoin Treasury companies. And in Washington, all eyes are on Wednesday. The White House is expected to host a major crypto meeting. President Trump, SEC Chair Paul Atkins, and CFTC Chair Michael Selig are reportedly attending alongside executives from Coinbase, Ripple, Gemini, and Polymarket. Traditional finance is showing up too, including NASDAQ, the NYSE, CME Group, and the DTCC. The meeting lands one day before the CFTC's new Innovation Advisory Committee holds its first session. This meeting also comes as the Senate pushes the Clarity Act into September, tightening the window for crypto's market structure bill before midterm campaigning ramps up. Bitwise Chief Investment Officer Matt Hogan joined CNBC to break down what a meeting like this could mean for the market. Take a listen.
Having this meeting with leaders, with the president there, is an indication of a continued commitment to crypto. So that is good for Bitcoin. The bigger winners from this, or the key winners, I think are actually the DeFi apps. Things like Uniswap, Aave, maybe Hyperliquid, even oracles like Chainlink. The reason for that is those apps are priced today like they're serving the crypto market, which is a $2 trillion market. This kind of meeting says those apps are actually going to serve the equity market, that's a $150 trillion market, or the bond market, that's a $200 trillion market. So I think investors are going to have to upsize their total addressable market for those things. In ETF land, that means things like the Bitwise Hyperliquid ETF, maybe the Bitwise Solana ETF, since a lot of tokenized stocks trade on Solana. I think those are the kind of winners we're going to see.
Meanwhile, World Liberty Financial, the crypto venture backed by the Trump family, just cleared a major regulatory hurdle. The OCC gave conditional approval for World Liberty Trust Company to operate as a national trust bank, letting it issue and manage its USD1 stablecoin directly and offer digital asset custody to institutional clients. USD1 has already grown past $4 billion in circulation. The bank will not take deposits or make loans, and World Liberty still needs to meet conditions, including holding at least $20 million in capital before it can fully open. The Treasury Department also moved on stablecoin rules this week, proposing new federal definitions under the Genius Act for what counts as issuing a U.S. stablecoin and who has to follow the law. Treasury Secretary Scott Bessent said the goal is regulatory certainty that keeps America the crypto capital of the world. The public has 60 days to comment with attention on how the rule treats foreign issuers like Tether. The law's one-year implementation target has already passed, and the next deadline is mid-January. On Wall Street, JPMorgan is opening the door to Bitcoin-backed lending, letting institutional clients use Bitcoin and Ethereum as collateral for dollar loans held by third-party custodians. Reported haircuts on Bitcoin collateral run between 30% and 50%, so a $1 million Bitcoin position might only support $500,000 to $700,000 in borrowing. It lets institutions unlock cash without selling their crypto assets, and it's the latest sign of banks folding digital assets into standard credit markets. New 13F filings out this week show how big institutions are positioning in Bitcoin. Harvard held its ETF stake steady at just over 3 million shares worth about $101 million after cutting the position for 2 straight quarters and fully exiting Ethereum. Tudor Investment, Paul Tudor Jones Macro Fund, increased its IBIT holdings by nearly 19%. JPMorgan grew its own IBIT position to over 10 million shares, while Morgan Stanley trimmed its stake by about 4.5%. It was a rough week for crypto customer data. Israeli broker Bits of Gold disclosed a breach affecting about 200,000 customers after hackers accessed a third-party analytics provider, exposing names, national ID numbers, and bank details, though no funds or private keys were touched. Separately, Binance-backed wallet maker SafePal disclosed a breach exposing names and shipping addresses for nearly 40,000 customers. Funds were never at risk, but for a customer base known to hold crypto, a leaked home address carries its own risk. Finally, sanctions pressure on Iran is intensifying and crypto is a central target. Treasury Secretary Scott Bessent is promising an escalation he calls economic wrath, with a key piece being the tracking of cryptocurrency used by Iran's Revolutionary Guard to move money around sanctions. US officials say they are using artificial intelligence and on-chain analysis to trace Tether and Bitcoin transactions linked to Iran, freezing wallets and cutting off access to cash alongside a naval blockade of Iranian ports. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.